The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN. Breakout Investing with your host, Ken Shreve.
Hey, good afternoon, everyone. Welcome to another edition of Breakout Investing on TFNN. Wednesday, Hump Day, February 6th, just after 3 o'clock Eastern. Just after noon Pacific time, where I am in sunny Los Angeles. Great to have you join me on the program today. 877-927-6648. That is the toll-free number. Give me a call. Let's talk about this market that continues to hold gains nicely here. I just tweeted out that, listen, the case for a market pullback definitely holds water. The case for more gains also holds water. So when is the market ever not tricky? Tricky right now because they're, again, what we've been talking about in recent shows, a lot of extended stocks out there. Stocks have been running for a while, a lot of big breakouts. The market served up on January 2nd when major averages scored those big percentage gains to kick off the new year. So on the one hand, you have a lot of extended stocks out there going through the screens today. Still seeing some interesting candidates, some stocks setting up beautifully ahead of earnings reports. But, buying growth stocks very close to earnings, that is, a very risky proposition. So I typically like to see what the results look like. And, if the stock gaps up on strong earnings, sometimes there's an opportunity to buy on a gap up. So we'll take a look at some interesting setups in just a little bit. But again, 877-927-6648. You can catch my show every day on TFNN from 3 to 4 Eastern. It's available as a podcast on iTunes if you can't listen live. Don't forget, you can listen to all TFNN programming on your smartphone as well. Just plug those earbuds in. All you have to do is open your smartphone browser, type in tfnn.mobi. Easy as that. You can listen to the stream that way. And Tiger TV, available at tfnn.com. The show is carried live on Channel 1. It is archived on Channel 13. You can look at charts live right along with me with Tiger TV and, of course, get the show audio. And Tiger TV is also viewable on your handheld device as well. Open up your browser again, type in tfnn.com. And then over on the right-hand side of the homepage, you'll see a box with 3 cell phones in it. Just click that box, and it'll recognize what kind of device you have and start streaming Tiger TV right on your cell phone. All right, taking a look at the NASDAQ composite here, about 50 minutes left to go in Wednesday's session, and we see the composite down about 7 points, trading in a very tight range, right in the middle half of its range for the day, down about 0.2% to 3164. 3164, that's the last price for the NASDAQ composite. Volume today, pretty much the whole session, been tracking lighter than what we saw yesterday. NASDAQ volume today tracking about 7% lower than the 2.09 billion shares we saw yesterday. That's pretty heavy volume for the NASDAQ these days, above average. Yesterday on the New York Stock Exchange, volume was average at 699 million. Volume on the NASDAQ for the past several days has been above average. Typical average daily volume for the NASDAQ these days, about 1.7 billion, give or take. So we've been above average for several days on the NASDAQ, and volume on the New York Stock Exchange has been pretty much average or below average. So yesterday on the New York Stock Exchange, 699 million shares. We are tracking about 3% lighter than that today. So NASDAQ composite trading in a tight range, not giving up much ground here. Let's take a look at the S&P 500. We'll see a similar situation. S&P 500 trading in the top half of its range, only down about a point to 1510, and the Dow Jones Industrial Average, 30 blue chip components here, trading near its high for the day, only down about 8 points to 13,971. Inside the Dow, well, last night we heard from Walt Disney. Kind of disappointing price action here. A good technical setup for Disney ahead of earnings. You saw the stock trade in after hours yesterday. Was trading well above that 55 level. Looked like a good, solid, heavy volume breakout was going to take shape. But, you know, when you're listening to the bear case and you're listening to the bull case, you know, when you see price action like this, you have to wonder if results can't fuel a good solid breakout here for Disney. Granted, a lot of good news had been priced into this stock. Disney broke out on January 2nd, cleared a swing point of around 51. So headed into today, it was trading around 54 and a quarter, something like that. Right now, only up 21 cents to 54.50. It hit an intraday high of 55.50. So as you can see, trading near its session low. When that stock hit 55.50, boy, a lot of sellers came in there, and stock is now near its session low, only up 0.4% on the day. Earnings fell 1% from a year ago to 79 cents a share. That was 3 cents better than the consensus estimate. Sales were up 5% to $11.3 billion. That was better than estimates for $11.2 billion. Revenue at Disney's media networks did well. That includes ABC. Rose 7% to $5.1 billion. So you can see it almost makes up half of Disney's revenue. Taking a look at April gold today, up $5.30, undeterred by strength in the dollar today. So April gold up about a third of a percent, settles at $1,678.80 an ounce. U.S. dollar index rallying today at 79.77, up about 0.4%. March crude oil, not much movement, down 2 cents to settle at 96.62 a barrel. We did get crude inventories today from the Energy Department's Energy Information Administration, otherwise known as the EIA. Data showed that crude supplies rose by 2.6 million barrels to almost 372 million barrels. This is weekly supply data. Gasoline stocks rose 1.7 million barrels to 234 million. And supplies of distillate fuel, that includes diesel and heating oil, distillates fell 1 million barrels to almost 130 million barrels. Interesting, I was looking over at MarketWatch.com today, and they had a little piece. Goldman Sachs came out with a list of their top 10 stocks with the greatest upside potential based on where they're trading now and the price targets that Goldman Sachs have assigned to them. We mentioned that March crude oil was down 2 cents today to 96.62 a barrel. There were 3 oil and gas names on this list. The first was WMB, Williams Companies. This is an integrated oil and gas firm. You can see here building the right side of a base, approaching its prior high over here in September, October, around 37. So Williams Company's a base building stock, down 10 cents today to 35.64. The Williams was on the list. Also SWN, Southwestern Energy. This is an oil and gas producer. SWN recently climbed above its 50-day moving average, has been sitting above the line for a couple of weeks now, but really not a whole lot of action in the exploration and production group. But Southwestern Energy, Goldman thinks this one can be a nice outperformer. And finally, National Oil Well Varco, also on this Goldman list of top 10 stocks with the greatest upside potential. Market seems to differ here with National Oil Well Varco. This is an equipment provider to the oil and gas industry. The stock is down another 2.6% today to $66.43. This was an $88 stock back in September, so in the throes of a nasty pullback here. So we'll see if Goldman ends up being right on this one. Also on the list, Apple was on this Goldman top 10 list. Prudential, Goodyear Tire, Applied Materials, Joy Global, Ford, and Discover Financial Services. Bond yields lower today, not by much though. 10-year note now at 1.97%, 30-year bond at 3.18. at the gym today and was listening to this U.S. Postal Service press conference. You probably heard by now that the Postal Service is going to end Saturday delivery of mail starting in August, I believe August 1st. This year, the move is going to save the post office about $2 billion a year. And, I'll tell you what, I don't know how the U.S. Post Office has made it this long. Apparently, they've been losing about $36 million a day. $36 million a day the post office is losing. So they've been belt-tightening for quite some time. But they talk about raising the price on a postage stamp. They've been doing that, but when there's less volume, that does not translate into the revenue you might think. But certainly a shift to online payments has hurt volume at the post office. No more Saturday delivery starting in August. Big move for Virgin Media yesterday. The company acknowledged it was in talks to be bought out, and that deal was consummated. Cable TV operator Liberty Global, controlled by John Malone, is buying the UK-based company for $16 billion. The merger is going to create a broadband communications company covering 47 million homes with 25 million customers in 14 countries. So you can see the big move by Virgin Media yesterday. It is down 1.3% today to 45.02. Liberty Media, kind of a strange ticker symbol here. Let me see if I can get it right. LBTYA. LBTYA. I think this is it. Yeah, Liberty Global down 2.8%, stops just short of its 50-day moving average, hits a low of 63.79. It is trading near its session high, but still down 2.8% on the news to 65.90. Other headlines today, we mentioned the upcoming IPO of Boise Cascade, BCC. This is, they priced last night at $21 a share. The initial range was going to be 16 to 18. Then it was raised to 18 and 20. Then it priced at 21. Where's it trading now? 26.07, up another 24%. So very successful debut for Boise Cascade. This is a wood products manufacturer, building materials distributor. There's talk we could hear from X1, XONE tonight. They could price tonight, start trading Thursday. This is a 3D printing company that's going to trade under the ticker XONE. Small company. They plan to raise $75 million by offering 5 million shares at a price range of 14 to 16. Wouldn't be surprised to see demand strong for this 3D IPO. Take a look at some other 3D companies here. 3D Systems extend its winning streak to 4 sessions. Good day of outperformance today, up 6.6% to 66.71. We're going to hear from 3D Systems later this month on or around February 25th. And Stratasys as well, yet to report. We should hear from Stratasys in early March, firming up in its 50-day moving average as well, up 3.6% today to 83.47. Headed into the first break, folks. Appreciate you listening. Breakout Investing on TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Speaking of Breakout Investing, let's go to Joe, New York City, who wants to talk about buying breakouts. Joe, how you doing today?
Hey, Ken, I'm doing really well. I love the show.
Thank you very much. Appreciate it.
Sure. So I noticed in the last couple of days there have been some failed breakouts. If you want to look at like Estee Lauder yesterday.
Yeah.
Stocks breaking above their buy points from valid bases, and throughout the rest of the day maybe sell off and fail on high volume. So I wanted to call and ask if you have a template for buying breakouts, or if you wait until the end of the day, or maybe wait for a pullback or flaggish pattern in the days afterwards.
I think it's a loaded question, but let me just take it bit by bit. I think with all things being equal, buying breakouts during the first hour of trading, can be very risky because you don't know how the full day is going to play out. You could get stuck with a reversal by the end of the session. So with all things being equal, it's not to say that I never will buy a breakout early in the day. The general rule of thumb I follow is to always wait, for the first hour of trading to pass. So out here on the West Coast, between 6:30 and 7:30 in the morning, I kind of let things shake out, and I'll see some stocks moving. I'll see some stocks clearing swing points, and believe me, it's tempting. 15 minutes, 30 minutes into the session to buy them, but I like to generally wait for the first hour, and I think the safest way to do it is really to wait towards at least the second half of the session. It doesn't mean you can never buy early in the day, but waiting for the first hour is a good general rule to follow. in terms of the failed breakouts, I hear you. I'm seeing them myself. But for as many failed breakouts as I'm seeing, there's still plenty that are working. And when you look at the context of when this rally started, major averages started to strengthen into the end of last year. And then, I keep going back to this January 2nd day, first trading day of the year. When I look back at some of the stocks that I bought for the Ultimate Growth Stocks model portfolio, bought eBay on January 2nd, bought On Assignment, ASGN, on January 2nd. And you look at those, all the breakouts that the market served up on that day, by and large, all of them are working. And so I'm very hesitant right now. I love the way Akamai is setting up here, AKAM. It's in a great base. Looks like it's ready to break out, but you have earnings after the close here. But the market's been running for a while, so I can hear the case for more strength, but the fact that breakouts are starting to fail, there's a lot of extended stocks out there. I mean, look at Akamai today. I don't know if you're watching Tiger TV, but Akamai hits a high of 42. Looks like it's getting ready to take out a swing point, right around 42.5 thereabouts. It is near its session low, so there are sellers in this stock ahead of earnings. So,
yeah, I see that. Cerner kind of did the same thing as well today. CERN.
Yeah, I think did they have earnings last night or today? I know they were. I think they reported earnings. Not sure, but yeah, that's kind of. I'm very cautious right now. I mean, we've been we were aggressively buying up until the first week or two of January, and now we're just kind of we're letting what we have work. I started a couple of new positions recently, but definitely playing more defense than offense at this point.
Yeah, you have to wonder about stocks that try to break out this late in the follow-through day anyway, I guess.
That is true also to some extent. I think Bill O'Neill over at Investors Business Daily, I used to hear him say that, leaders can come out, what is it, like two up to 3 months, you can see new leadership taking shape. But again, we're looking at a bull market that started in March 2009, so we're coming into the fourth year, right? So we're kind of long in the tooth there. So, everything that I own is acting fine, and I'm not seeing anything in the way of meaningful sell signals. It just comes, when it comes to putting new money to work here, it's a lot tougher than it was, say, a month ago.
Sure. Hey, thanks, Ken.
All right. Thanks for the call, Joe. Appreciate it.
Take care.
All right. Yeah, good questions. And, that's another sign that buying demand is, possibly drying up here. It's not a guarantee that it's happening, but when you start to see suspicious action. We keep going back to Amazon, AMZN, before we head into this break here. Take a look at Amazon. Look like a beautiful breakout here over 263, runs up to 285, and this thing, man, I mean, it has just face planted. Now, the question of whether or not it's going to be able to hold above its 50-day moving average. Breakout over 263, runs up to 285, now trading at 262.18, holding its 50-day for now, but we'll see. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks. Checking in on the markets here on this Wednesday. 25 minutes left to go in the session. Indexes trying to close green here. It's not out of the question. The Dow right now down 8 points to 13,971. Nasdaq Composite down close to 7 points, 0.2% decline to 3165, and the S&P 500 down 1 measly point to 1510. Volume on both exchanges tracking lighter than what we saw yesterday. And remember, folks, the sharp declines that we saw in the market on Monday, remember those came in lighter volume than Friday. And then Tuesday, what happens? We recoup a lot of those losses from Monday, and we actually had volume expansion. So that's exactly what you want to see during a market uptrend. When Joe called asking about some failed breakouts that he's been seeing recently, remember we touched on Disney at the first part of the show here. Decent earnings from the Mouse House, but you can see sellers in the stock, reverses after early strength, trading near its session low. Nice numbers from Estee Lauder yesterday. Pretty nice move for the stock. Finishes in the top half of its range, but no follow-through whatsoever. Just because a stock doesn't follow through immediately the day after a breakout doesn't mean it's destined to fail. But in a market uptrend, you like to see some additional follow-through after an initial breakout day. Estee Lauder down 2.2% in. Looks like volume's pretty light today, but no follow-through after yesterday's breakout. And then also Cerner Corporation trying to break out today, but again can't hold its gains. Hits an intraday high of 87.70, now trading at 85.32, clearly in the bottom half of its range. I mentioned, really, when I look at all the holdings in the Ultimate Growth Stocks model portfolio, if you want to get a trial to my newsletter, you can do that on the homepage of TFNN.com. Click on the newsletters tab on the homepage, then investment newsletters. You'll see Ultimate Growth Stocks right there. But a lot of our initiations were in December and very early January, specifically right around January 2nd, 3rd, 4th, 5th, in that area. eBay, we initiated a position on January 2nd. Here was the gap up right here, and you can see how buying right makes things a lot easier. We were in the early stages of an uptrend, so the buy here was right around 52, 53, thereabouts. It has rallied, still looking healthy here, and on assignment, ASGN, a speculative name, but outstanding fundamentals here. This was a beautiful gap up out of a nice long base. So two instances where we bought the gap, and in both cases it ended up working. So on assignment continues to act very, very strong here, and this was another buy on January 2nd. All right. Speaking of on assignment, this is a good segue because a really big mover in the market today. Let's take a look at KFRC, Kforce, same industry group as on assignment. Both of these companies are staffing firms. Look at this move by Kforce.com today, up almost 16% to 1566. There is some short interest here, so probably some short covering in the stock today, but also pretty good numbers. It is a small stock, so buyer beware here. The market cap is $575 million. Average volume of just over 200,000 shares. Earnings up 20% from a year ago to 24 cents a share. That was 2 cents better than the consensus estimate. Sales up 4% to $269.8 million. That was also better than expected. Let's take a look at a weekly chart here for Kforce.com, and you've got a very bullish breakout here. This is as textbook a cup with handle pattern as they come. Swing point here over 15. This looks very, very strong here. I already have staffing exposure in the model portfolio, but this is a picture-perfect breakout in heavy volume and a nice-looking breakout from a cup with handle base today for Kforce.com. It is on the speculative side, so just keep that in mind. Big day for Biogen IDEC. This stock was setting up nicely. This is just crazy price action, though. Look at this. It gaps up, hits a high of 167.35. It is now trading at 160.66. It is what it is, I guess. Still up 2% on the day, but trading right at its session low. The news around Biogen today is that it's going to acquire full rights and control of Tysabri from Elon, ELN, for $3.25 billion plus future royalties. So that's the news from Biogen. And we mentioned IPG Photonics. IPG Photonics. Let's keep an eye on this one. They do report earnings on February 15th. They make all kinds of lasers, fiber lasers, diode lasers. They also do fiber amplifiers for materials processing, telecom markets, healthcare. But this stock is down 23 cents to 67.34. I particularly like the look of its weekly chart here. So again, at this stage of the game, buying breakouts are getting trickier. No question about it, but this is a good example of how you had a breakout for IPG Photonics recently, and it's coming down to its 10-week moving average for the first time after a breakout. So buying at the 10-week line is okay. Normally, the rule that Investors Business Daily teaches is to, if you're buying for the first time, after a breakout and pull back to the 10-week line, just make it a little smaller position than you normally would. But IPG is showing good technicals ahead of its earnings report. In earnings news today, let's take a look. A lot of good stories, a lot of bad stories. C.H. Robinson Worldwide. Gap down for this stock today, all the way down to its 200-day moving average. Did not break below this long-term support level, but big sellers in the stock today, down 9.7% to 60.49. This is a provider of freight transportation services, basically a logistics company. Earnings were flat from a year ago at 68 cents a share, 2 cents below. Sales up 16% to $2.97 billion. That was better than expected, but the company said it's been a weak start to 2013, and because of this, the company may not be able to achieve its long-term 15% revenue, earnings, and margin growth targets. B of A Merrill Lynch cut its rating on the stock to underperform from buy. That's a pretty significant downgrade, lowered its price target to 60 from 74. Interesting day of trading for Chipotle, CMG. Chipotle is one of the restaurant stocks that's been talking about higher input costs. It's basically, margin pressures costing them more to, make food. They have been raising prices. Didn't so much do it in 2012, but they did have price hikes in 2011. Many are thinking they're going to raise prices again this year, probably not until the middle of the year. You can see Chipotle's 200-day moving average at 326 looks to be resistance for now, but after early weakness, Chipotle is up almost 6.1% to 323.49. Again, the 200-day moving average at 326, so it is less than 3 points away from the 200-day line. We'll see if it is resistance or not. But lots of technical damage done to Chipotle in recent months. It's made a nice comeback. Company still faces a lot of challenges, but good volume in the stock today, trading up near its high. The numbers: earnings up 8% to $1.95. That missed views by a penny. Sales up 17% to $699.2 million. That was slightly above expectations. Same-store sales up 3.8%. Also heard from Panera in the restaurant group. I actually like Panera better than Chipotle. I mean, both restaurants are great. Love the food at both places. Panera giving back a lot of its gains here. Hits an intraday high of 169.59, now trading at 164.83. You can see resistance here just over 168, and sure enough, it popped over resistance and was turned away. So both of these stocks technically very suspect ahead of earnings. Chipotle is certainly looking the better of the two at this point, but shares of Panera still up 1.1% to 164.83, trading in the bottom half of its range after early strength. Earnings up 23% to $1.75, slightly better than expected. Sales up 15% to $571.5 million, a little bit below expectations there, but impressive same-store sales growth, up 4.9% for the current quarter. Panera said it expects profit of $1.62 to $1.66 a share. Current estimate is for $1.62. Online travel firms. Expedia, EXPE, at last check under selling pressure, still is down 2.5% to 65.81. They missed earnings estimates by 2 cents, with profit of 63 cents a share, up 9%. Sales up 24% to $974.9 million. That was well above expectations, but again, Expedia has just been on a long uptrend here. This one looks like it's probably ready to build a base. Would not buy it up here. It is extended even after today's pullback. Other online travel firms, take a look at Priceline, giving back gains, still up 82 cents to $692.39. We should hear from Priceline towards the end of the month, on or around February 25th. But TripAdvisor, TRIP, TripAdvisor, they're going to be coming out with earnings on February 13th. And look at the chart. Another stock that's very extended here. You can see a big move for Trip back in early December. Went over 46, closed just over 40 on that day. So a big, heavy volume reversal here. No matter, the stock quickly found its footing, rallied back, but here you go again. High of 49.35 today, a low of 46.92. The stock is trading at its low for the day, 46.92, up 8 cents on the day. So a lot of these extended stocks, this is the what you want to avoid, buying stocks that are already extended, too late to buy. Expedia is in that boat. Also, Trip is in that boat as well. So also wanted to take a look at Trimble Navigation. Yet another extended stock here, headed into earnings. This is a high quality company. They do global positioning devices, more for commercial use, but the earnings were pretty good, up 6% to 57 cents a share. Revenue of $515.5 million was better than expected, up 18% from a year ago, but a gap down for the stock, down 4.9% to 60.41. Again, very, very extended stock here. You can see a base breakout back here in early November, sort of an odd looking base, but again, breaks out over 54 and a nice run up for the stock. It is trading right at its 50-day moving average here, which is at 60.02. Again, Trimble right now trading at 60.41. So will it be able to hold its 50-day line or not? This is the question. Also heard from another strong performer in the market, but surprise, surprise, another very extended stock. I can't reiterate that enough. The number of extended stocks out there is just, it's a huge supply of them. So be careful not to chase here. Madison Square Garden, also very extended, headed into today. Suppose you could have, bought right around here, 45, 46, when it broke out in early January. But breakout over 46 runs up to 52 thereabouts. It is up 2.7% today to 53.51. But yet another example, uncanny. How many stocks are trading near their lows after early strength today? Madison Square Garden, they own. Let's see. They own the New York Rangers. They own the New York Knicks of the NBA. Their revenues were hurt in the quarter because of this NHL work stoppage. It delayed the start of the NHL season by about 3 months. That means no games at Madison Square Garden. So their revenues were only at 4% to $387.9 million. That was a big miss, but again, the NHL strike affected that. MSG also operates venues, of course, Madison Square Garden, but also Radio City Music Hall and the Forum, where the Lakers used to play many, many years ago in Inglewood, California. So Madison Square Garden, very extended headed into today. Not a stock I would touch with a 10-foot pole up here, but giving back some of its early gains. Mentioned Akamai earlier in the show here. This one is setting up for potentially higher prices, but again, when you're looking at technical setups like this, with the market running as much as it has already, whether or not some of these laggard setups are going to be able to work remains to be seen. But Akamai setting up here ahead of earnings, up 38 cents today, almost 1% to 41.43. This company makes gear that helps basically speed up the delivery of content over the internet. Look for a profit of 50 cents a share. That would be up 11% from a year ago. Sales up 18% to $381.3 million. And also going to be very interested to hear what LinkedIn has to say tomorrow. Another very nice setup here ahead of earnings. Expecting another quarter of strong growth at LinkedIn. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. Quick check on the markets here as we head into the close. Right now, the Dow down 4 points, 13,975. NASDAQ Composite down 6 points to 3165. S&P 500 down fractionally to 1511. So indices holding on to gains nicely. Talked about earnings from Akamai after the close today. LinkedIn will be reporting tomorrow after the close. LinkedIn is a current holding in the Ultimate Growth Stocks model portfolio. You can see another gap up here. This is where we added the position here right around 116, 117. So it's been performing very well, setting up nicely here ahead of earnings, expecting strong numbers. Another stock acting well ahead of earnings. We're not going to hear from NationStar Mortgage Holdings until February 19th, but working on, 7 straight price gains, approaching a buying area here. Volume has been getting lighter and lighter and lighter on the way up. You can see that, but still, this is a recent new issue with tremendous growth prospects, so it would definitely be worth looking at if NationStar Mortgage Holdings attempts a technical breakout over a swing point here. 40.61 would be the breakout area that we're looking at here. Also want to take a look at SodaStream. Did you see the company's ad on the Super Bowl last Sunday? SodaStream starting to show some pretty volatile price action here, but there is a legitimate growth story going on at SodaStream. Stock is up 5.8% today to 51.14. We are not long the stock, still very extended up here. You had a recent breakout over 42 back in December. Really showing some erratic, crazy price actions. This is just a very volatile stock here. Earnings are due February 20th, and we should see earnings up 19% from a year ago, sales up 41% to $121 million. This is a homemade soda pop. You can make your own soda at home. Coming up tomorrow, in terms of economic data, we've got weekly jobless claims are expected to fall 8,000 to 360,000. Then on Friday, quiet day of data, trade balance for December, wholesale inventories for December as well. Also, after the close today, let's check in on GMCR. Impressive comeback in recent weeks for Green Mountain Coffee Roasters. Tremendous comeback, actually. You've got to give the stock credit here. A lot of concerns about increasing competition in the single cup serving coffee market. Green Mountain appears for now to have shaken off those concerns. Here was a stock that corrected all the way down to $22, $23 a share. It is now trading at $48.96, still showing relative price strength. Still looks to me like the stock is under accumulation here. Look for a profit of 65 cents a share at Green Mountain. Sales up 15% to $1.33 billion. Also expecting strong numbers from Ixia. They make network testing equipment. Ixia in a nice setup here. There's a lot of optimism about growth in the current quarter. Earnings of 23 cents a share would be up 28% from a year ago. Sales up 48% to $123.4 million. A few weeks ago, Ixia came out, raised its revenue guidance, and that is a big reason why the stock has been performing well. So this looks to be a legitimate player in the networking space. We'll hear from Ixia after the close. And finally, after the close, you can see still very busy in terms of earnings. We're going to hear from Visa. And Visa continuing to show relative price strength. Looks very extended up here to me. Stock up 87 cents to 160.40 ahead of the results. Visa, no stranger to good bottom line and top line growth. I'm sure we'll see good results from Visa after the close. Coming up next, the Tom O'Brien Show. I'll see you back here tomorrow, folks, 3 o'clock Eastern, for another edition of Breakout Investing. Have a great day.